Hello and welcome. This is View from the Top. I am Modele Sarafa-Yusuf. Thank you for tuning in. The banking industry is the fulcrum around which the rest of the economy revolves, but the falling oil prices, likely spike in bad debts, political uncertainty, and new government policies and regulatory measures aimed at stabilizing the economy are presenting great challenges to the financial sector. Only a few days ago, banks had to transfer an estimated 1.2 trillion naira of public sector funds to the Central Bank of Nigeria in compliance with the government's directive on Treasury's single account. Before then, there were the new foreign exchange policies aimed at shoring up the value of the naira. What are the implications of CBN's directives for the economy and for the banks? What else is likely to come as the new administration unfolds its economic policies? How can the industry expand access to consumer credit, which is becoming increasingly important to the national economy? The Group MD and CEO of Diamond Bank, Mr. Uzoma Dozie, joins me on View from the Top today to discuss this and more, and I want to thank him very much. Thank you, Mr. Dozie.
Thank you for having me on the show.
Here is a brief biography of the GMD before we begin our conversation. Uzoma Dozie was born on November 2, 1969. He graduated in 1991 with a BSc in chemistry from the University of Reading, Berkshire, England. He obtained a Master of Science degree in chemical research from University College London in 1992 and got an MBA with specialization in finance in 1998 from the Imperial College Management School. He also got a certificate in management development from the Harvard Business School. Mr. Dozie started his banking career as an executive officer in Guaranty Trust Bank in 1993, where he worked in the commercial banking unit, and later moved to Citizens International Bank Limited, where he worked in the oil and gas division. In 1998, he joined Diamond Bank PLC as an assistant manager and head of the bank's oil and gas group, where he expanded the bank's oil and gas businesses. He has served in different capacities, spanning various roles and functions related to credit and marketing, planning and financial control, and business process re-engineering. He was appointed Deputy MD in April 2014 and became Group CEO in November 2014. He's currently the Secretary of Harvard Business School Alumni Association of Nigeria. Let me start by asking you, government accounts were said to be about 10% of the liquidity in the banking sector. With the takeoff of the TSA, what does the withdrawal of all of that money portend for the banking sector?
The first obvious impact is there will be a reduction in liquidity. Now, for some banks, the impact will be more than it would be for others, and so it would depend on the individual bank's source of funding, and then, of course, the more the impact and the more drastic action that they would have to take, or reviewing their strategy and how they source for funding, and so it's difficult to tell which bank will be impacted more than the others until we get, of course, our next financials, or we're all now listening into the next investor calls. But the global impact is less liquidity in the market, which might now impact the cost of money to the public at large.
This fears that this might lead to job losses in banks and so forth. Are these unfounded fears?
I think they're unfounded. I think the banking industry is more robust than people think. On a daily we face different types of crises. Some are small, some are large, and sometimes you get the perfect storm where everything just seems to hit you at once. But this is an industry that has over the last 10 years, increased its capital, increased its governance structures, especially after the 2008 economic crisis. And so our ability to absorb shock will be much higher now than it was in 2008. So what it would mean really is that there will be impact on, should I say, the profitability in the short to medium term, while we now, depending on the banks, look at our various strategies of how to, should I say, diversify our revenue streams and also our liquidity areas. I think the job losses will be business as usual job losses. We are not like other geographies where when there's a drop in economy, you see a drop, or should I say, a rise in the firing of people. Here, why we say that is because the opportunities in Nigeria are still large. And then when you see, when you think that it's only about 15% of the economy is actually banked, it means that banks have to really start developing products and services and infrastructure to service the economy at large, which we haven't been doing. And so there are 90% of the economy that is unbanked. And so that means that for the investments we've made in employing, in developing people, we can now channel that into penetrating the bankable public at large.
The banking industry has clearly seen margins come under pressure following the crisis of recent years and with all of these new directives. How can banks achieve growth amidst the current pressures and challenges?
One thing for sure, and I liken it to oil, the price of oil. I don't think that we're going to see oil prices at $100 a barrel anytime near in the future. And I also think that we're not going to see those margins that we saw, that we've should I say, enjoyed in the banking industry. So what we're going to see is that for us to, should I say, maintain those revenue volumes, you have to increase your customer base. It means that you now have to generate lower margin income from a larger base of customers. And I think that is applicable to all banks that are playing in this industry.
Going by figures recently released by the Nigeria Interbank Settlement System, only about 20 million Nigerians have got their BVN. So maybe a couple million more have bank accounts. Out of a population of about 170 million, it does seem that the significant branch network expansion that has taken place over the past decade has had little impact on financial inclusion. Why does this continue to be the case, and what needs to happen to promote financial inclusion?
Diamond Bank started 20 years ago, and our vision statement then was to be in key financial centers in the world. Now, that was before the evolution of a technology that enabled us to provide different products and services and access to market. 20 years down the line, that vision statement is still, the core of that statement is still there, but we know that we don't have to be in key financial centers. We just have to be able to provide services for our customers wherever they are in the world, whatever time, to access banking services, which we've achieved. We have Nigerians all over the globe actually accessing our services. And so that same philosophy is what we're using to drive financial services even into the unbanked. And so we do know that it is not cost effective to roll out branches to every nook and cranny of Nigeria. But we do know that the penetration of mobile phones has been very, very successful in Nigeria. The adoption and the usage, and also the internet access, data access has been quite successful, considering that GSM came into Nigeria in 2001, and since then we've seen an explosion. For us, mobile is the future of financial services. Mobile money has its challenges, and we see it as a stopgap. And so we have partnered with telcos to provide full banking services for people, regardless of whether you're financially underbanked or financially excluded. As long as you have a mobile phone, you can open a full banking account, which enables you to transfer money to anybody in Nigeria that has a bank account, or receive money from anybody that has a bank account. So there's that interoperability that allows you to do that. So we don't see it as providing services for the financially unbanked or people at the bottom of the pyramid. We see it as providing people with a choice on how they want to bank. If you want to use a mobile phone, you want to go to a branch if it's close to you, and whatever device that you use, you have access to full financial services regardless. So unlike the Safaricom M-Pesa model, where it is just financial, it's just money transfer. In Diamond, with the Diamond Yellow account, it's a savings account that allows you to save, allows you to access to credit, and allows you to receive and pay money to just like a mainstream current account holder would have.
We must take a break. Please join us again.